how short people's memory is, thinking that everything is okay just because this last event is behind us in the rearview mirror. There are so many things bubbling under the system that people don't quite understand, and this is one of the things that I think is going to only make this situation much worse than it is, because you can't get out of the way of what you don't see coming. And so many people have they're looking at what we saw over the last month or so with the banks as something in the rearview mirror. But I mean, when you look at the bigger picture, take a look at the macro side of thing. On one hand, the banks, it's okay. It was smoothed over by J.P. Morgan. People are talking about now all of a sudden they're concerned about the debt ceiling, and only focusing on the fact that we continue to bump up against this stupid debt ceiling and focusing on a $31 trillion debt, ignoring the fact that the unfunded liabilities in this country are over 4 times the debt. Medicare, Medicaid, Social Security, which in and of itself is $76 trillion underfunded, 2.5 times the size of the national debt, government military pensions. The debt burden is enormous and not going away. When you talk about how do we pay that off, how do you pay off $150 trillion in unfunded liabilities on top of this debt? There's only 2 ways. And Richard Russell, my mentor, was well ahead of his time 20 years ago when he said the Fed has 2 choices, but to inflate or die. Take a step back even further and look at the head of the International Monetary Fund, Kristalina Georgieva, who said the problem with the banking sector in the United States is complacency, that the ability of people to, with a click of a mouse, move their money is the problem, and that requires much, much more supervision and regulatory action. You have the two of the main advisors to the president right now, as I mentioned last time on your show, Jared Bernstein, whose whole thesis, who is now the head economic advisor to the White House, is the removal of the dollar as the world reserve currency. You have Lael Brainerd, who is another advisor to the White House, whose whole thesis is removal of the banks. Take a look at what's happening right here, and you could draw a screenplay pretty easily to where what's happening here domestically would fit into both of their screenplays, where one gets his wish as the dollar losing its reserve, and the other gets her wish as all of the banks are gone, and we go full modern monetary theory directly to the Federal Reserve, an entity that is aiding and abetting this exodus from the banks with rates higher than you can get at any bank without the systemic risk of being pulled down by the banks. And that's why we're seeing a massive departure, not just from the regional banks, but from the commercial banks too. And then you talk about all the things that we've talked about ad nauseum with BRICS. There's so many things bubbling under the surface. It just goes to show really how little most people are paying attention. And it drives me crazy. And well, gold and silver haven't done a whole lot lately, blah, blah, blah. There are so many things that I could point to. People don't want to listen. Like, how is it that we're seeing record amounts of metal disappear? More gold accumulated by the central banks in the last 18 months than ever in history. Why? Why is COMEX now down to 29 million ounces in the registered category? And how about the fact that the commercial banks right now have 9,000 contracts short, roughly, about 45 million ounces, yet there's only 29 million ounces in bars, that if everyone who took the other side of that short stood for delivery, we got a real big problem. 15 million ounces that isn't available for delivery. Where does it come from? Who's going to sell it? Are we that close to it blowing up? Is this why people have been pulling all their metal off the exchange? Is this why the commercial banks, according to Ted Butler, are not shorting the rising price? Also, they're trying to skillfully engineer their way out of this. And there's one very, very large managed money trader right now who really has the largest short position out of all of the managed money, or out of all of the short positions, and he surmises maybe BlackRock. But I don't know if that makes sense either, because they just took a huge position in PSLV. So there's so many things that should make people stop for a second and say, well, just because there's a moment of calm before the storm, well, let's just forget about it. And I think that's a big mistake here. Complacency is going to hurt. You talk about being prepared. And again, I have said all along that whatever happens is going to happen. You could argue the old adage, gradually, little by little, then all at once. And that we always joke about that. Hemingway went broke that way. But many things in economics work that way too. Many things in this industry work that way. And if you haven't noticed, little by little by little by little by little by little, all the things that we've talked about for so long happening, then you sure as hell are only going to be blindsided when all at once happens. And that is the part that I think is maddening to me more than anything else, is people just think it all is okay because the last few episodes have blown over. So I guess we'll see. But if I had to guess, the old adage, the calm before the storm, will have great significance as we head closer and closer to a debt ceiling, which, by the way, if you look at the credit default swaps, I've been saying this for a few weeks now, they're going through the roof. The banks buy the credit default swaps because they are worried about a default on many things, mortgage-backed securities, on deals they have with other banks, and now in this case on the treasury market. It hasn't been this high since right before the 2008 financial crisis. So in other words, the insurance premium on backing a default by the treasury hasn't been this high since '08. The sophisticated investors are telling you we're not out of the woods, even beginning to come out of the woods. And when Janet Yellen said if we close, the government doesn't find a way to keep the lights on, you'll see lots of banks, dozens, I think she said, fail. So is this the calm before the storm? In many respects, I believe it is. Well, it's awful. And you talk about the FDIC as being this safety net. It's like a piece of dental floss underneath the trapeze, because they just had to borrow $173 billion from the Fed. At the end of 2022, they had $128 billion in reserves backing the entire U.S. banking system of near $18 trillion. I mean, what kind of safety net is that? You take the commercial banks out of the equation, and you got $9 trillion in the 4,000 regional banks of deposits that are being backed by $128 billion, and the FDIC had to take a loan out from the Fed. At what point do we realize that here again, the obligations, the backing, all of these things are centered around the continued destruction of the U.S. dollar through inflation. And there is no way out of this. If there just isn't. Either you default or you inflate, because we're not going to produce our way out of this. We're not going to increase the production and the manufacturing in this country and have that engine of growth that will allow us to get out of this mess. Quite frankly, we've offshored all of our manufacturing and production. So you have two choices: you inflate or you default. And I find it very interesting that the people that are advising the president, their main thesis is get rid of the world reserve currency and blow up the banks and have a modern monetary theorist running the show. Now, could that just be coincidence? Sure, I guess it could. But then take a step back and look at all the things that we've done, like weaponizing the dollar, like telling Saudi Arabia we're going green. And that is the linchpin of the world reserve status, of the petrodollar. All of the moves that we are making are counterintuitive to a country that would cling to the great privilege it is to be the world reserve currency. Instead, we're like a spoiled kid who squandered away his great-grandfather's fortune, who started a company, and we're spending and spending and spending, and now asking to borrow some more. A country that has to borrow money to pay back money it's already borrowed, or to pay back interest on money that they've borrowed, it's just crazy. And here we are at the 12th hour of a debt default, and our president doesn't